have a quick question for you. Do you think that you're a smart investor? Because if you do, you might want to check your performance against the S&P 500, the industry metric for how the market is doing. Over the past decade, the S&P 500 has delivered average annual returns of around 10%, outperforming the vast majority of both individual investors and even professional managers. It raises a very fundamental question. If even institutional investors with research teams and trading algorithms can't consistently outperform the market, what's the point of even having an asset manager? To give a more in-depth explanation, asset management is all about making investment decisions on behalf of clients who want exposure to public equities and other tradable securities. This would include mutual funds, ETFs, hedge funds, and large asset managers like BlackRock, Vanguard, or Fidelity. These firms are responsible for researching stocks, constructing portfolios, and deciding whether to buy or sell, ideally to outperform the market or meet specific client goals. Further, who are the people who work in this industry, and what do they do? Well, jobs include portfolio managers, research analysts, risk specialists, and then relationship managers. For my Ask a Wildcat, I spoke with Young Bin, a current private wealth manager with a long history of working in the institutional investment market. For Young, day-to-day work involved creating write-ups on industry trends and favorable companies, going on earnings calls and interviewing C-suite executives, and even especially conducting due diligence to ensure that his stocks would perform like his predictions. And who do asset managers work for? You might think that only the rich can afford to invest large sums of money into the market and even afford those high fees associated with professional investors. However, it's actually not just ultra-wealthy individuals. It's also teachers' pensions, college endowments, retirement accounts, and insurance companies. So while the industry may seem a little distant, the decisions made by asset managers actually have a direct impact on the financial well-being of ordinary people like you and me. But more recently, that impact has come under a lot more scrutiny. The fact that the S&P has outperformed most investors, even the professionals, has pushed clients to really question the value that they're getting. I mean, why pay for high fees for an active manager if they can't even beat a low-cost index fund? So that kind of pressure is driving a wave of change across the industry as asset managers have to reevaluate how to create value in a market where simply tracking the index often does better than just trying to outsmart it. According to a recent report by Northern Trust, this shift is starting to fuel several mega trends that are currently reshaping institutional investing. One of the biggest changes is the growing reliance on alternative and digital assets. So that's things like private credit, infrastructure, private equity, and even blockchain-based investments like cryptocurrency. These are areas where traditional index funds just can't compete, and they also offer asset managers a chance to deliver returns through specialized strategies. Another change and trend is the use of data science and automation. Firms are increasingly using big data and AI to enhance their decision-making and reduce operational costs. These tools not only improve efficiency, but help managers respond more quickly to volatility and risk. After all, why do it yourself when you can have AI predict and do it for you? When I spoke to Young, he also talked a lot about the potential of generative AI, its ability to conduct research, compile data, and even help make decisions on day-to-day investing. For everyday investors and institutions alike, these innovations aim to balance cost, performance, and transparency. And while the industry may be under a lot of pressure, it's also adapting in ways that could ultimately lead to better outcomes for the people whose money they manage, people like us. In the past, investing was truly reserved for institutions and wealthy individuals. But today, that's no longer the case. With the rise of low-cost index funds, apps like Robinhood, and commission-free trading, investing has been democratized. It's easier than ever for ordinary people to put their money to work. At the same time, the asset management industry has had to evolve, adopting new technologies, exploring alternative assets, and redefining what it means to add value. However, regardless of whether you're managing your own portfolio or entrusting it to a professional, the market doesn't really care, and beating it is still as hard as ever. So, do you think you're up to the challenge?